Hey guys, welcome to Trading the Charts. My name is Rex and this is Tesla Weekly Analysis number 55 for week ending October 23rd, 2021. On Monday, Tesla was up 3.2%, closing at 870.11. A very bullish day for Tesla. As anticipated, it tested a major resistance level of the bottom of the green channel at around 870. As I mentioned before, breaking into this green channel is a major bullish indicator that Tesla will likely run back to all-time highs, because it would reestablish itself within this channel trend line that goes all the way back to August of last year, and would set up Tesla for a run to the top of this channel, which currently lies at around 1,085. Another bullish indicator which signals that this breakout has legs is if we look at the RSI. As you can see, after consolidating between 50 and 70 since June, it has finally broken out. And remember, in technical analysis, the longer the consolidation means the bigger the breakout will be. So the RSI has a lot of room to run to the upside, signaling bullish momentum and strength. On Tuesday, Tesla was down 0.7%, closing at 864.27. The resistance of the bottom of the green channel is proving to be a difficult hurdle to get past in the last couple trading days as predicted. It was rejected by this trend line at around 870 and pulled back a bit today. If the bottom of the green channel holds as resistance, we could pull back and retest the consolidation level we broke out of at 805. But the bigger picture is looking quite bullish, because if we look at the monthly chart, we are still trading within this long-term uptrend channel as shown in red, and are actually pushing higher towards the top of the channel. It has a well-defined series of higher highs and higher lows. This is the same story if we look at the weekly chart. It's trading in a well-defined long-term uptrend channel, bouncing clearly off of support of the bottom of the channel, and now starting to pull away higher. On Wednesday, Tesla was up 0.2%, closing at 865.80. After getting rejected at resistance of the bottom of the green channel, Tesla traded flat today as it continues to hover just below this 875 resistance level. It appears that it is waiting on earnings released today after the bell before it makes a decisive breakout or breakdown from these levels. With that said, third quarter earnings for Tesla reported in at $1.44 versus $1.25 expected. Total revenues was a beat, coming in at $13.757 billion versus $13.92 billion expected. Total gross profit was also a beat, coming in at $3.66 billion versus $3.43 billion expected. Automotive gross margins continue to improve as it rose from 28.4% last quarter to 30.5% in the third quarter. Automotive gross margin excluding credits came in at 28.8%, beating Wall Street estimates of 25.1%. According to Tesla, the third quarter of 2021 was a record quarter in many respects. We achieved our best ever net income, operating profit, and gross profit. Additionally, we reached an operating margin of 14.6%, exceeding our medium-term guidance of operating margin in low teens. After hours trading in Tesla show relatively muted response to earnings as it trades within a plus and minus $7 range, basically flat. As the market digests Tesla's earnings, I'll lay out potential support resistance levels to watch for going forward. As I mentioned, Tesla will have support at its previous consolidation level at 805, then 765 if it falls below that. The next support level comes in at its other previous consolidation level at 730. To the upside, we still have major resistance of the bottom of the green channel, which currently lies at around 875. A break above that and into the green uptrend channel would be extremely bullish, as I mentioned before. A break above 875 would set us up to easily test minor resistance level at the top of the orange channel, which currently lies at around 900. On Thursday, Tesla was up 3.3%, closing at 894. A really nice bullish day for Tesla as it finally breaks back into the long-term green uptrend channel as anticipated. The large buying pressure even brought us up to retest the top of the orange channel at 900 at its intraday highs. But let's not get ahead of ourselves just yet. We will need to see if the bottom of the green channel can now act as support going forward. I would like to see it hold within the green channel for at least a couple of weeks before we confirm the breakout into this channel is for real. If the bottom of the green channel can prove to be a support level going forward, we would just need to break out above resistance of the top of the orange channel at around 900 and it will be pretty much smooth sailing and continuation of new all-time highs. As of Friday at approximately 12 p.m. Pacific, Tesla is up 1.3%, currently at 905.48. Tesla reaches new all-time highs as it pushed higher today. After breaking into the green uptrend channel, not only has it held within it, but it has also flirted with resistance of the top of the orange channel at around 900. As I mentioned, we should monitor the price action the next couple of weeks to see if this breakout into the green channel is for real. As of now, the bottom of the green channel should act as support where it currently lies at around 885. If we look at the bigger picture, it appears that Tesla was trading within a consolidation zone between 545 and 775 beginning in March, then breaking out in September. You can draw similarities to the consolidation period from February through June of 2020, where it consolidated between 70 and 190 before it broke out and went parabolic. If history repeats itself, we could be in the early stages of another huge parabolic run. With that said, things are looking rosy for the bulls because if we look at the longer time frame of the weekly chart, you can see that Tesla is pulling away higher towards the top of the uptrend channel. Not only that, but if we look at an even longer time frame of the monthly chart, you can see the same thing here as it is pulling away higher towards the top of the uptrend channel. These are all indications that this major bull run is for real. So for near-term resistance levels, we have the top of the orange channel at 900. The next resistance level to look out for if Tesla breaks above that is the top of the yellow channel, which currently lies at around 965. But the bigger picture, according to the daily, weekly, and monthly chart, shows that Tesla is headed to 1,000 plus at the minimum. To the downside, we have support of the top of the orange channel at 900. The major support level is the bottom of the green channel at around 885. Remember, it is critical for the bulls for Tesla to stay above this level because as I've repeated, this green uptrend channel goes all the way back to August of 2020. So re-establishing itself in this long-term channel would be extremely bullish. If it happens to break back below the green channel, we will have support at the previous consolidation zone at 805, then 765. This 765 level should be significant support because we also have support of the 50-day moving average also converging upon this level where it is currently at around 762. So those are my price predictions for next week. Bull case, we have resistance at 900. A break above that and we will see a test of resistance at 965. If it breaks above that level, we will likely see a move to 1,000 plus. Bear case, we have support at 885. Below that, support comes in at around 805. If we drop further than that, we have strong support at around 765. Now, on to Tesla news. Big short investor Michael Burry says he's no longer betting against Tesla. Investor Michael Burry of The Big Short said he was no longer betting against Tesla and that his position was just a trade. Burry's Scion Asset Management said in a regulatory filing in mid-May it had put options on 800,100 Tesla shares as of the end of the first quarter. Details on the strike price of the puts, their value, and whether they were part of the broader trade were not available. Based on Tesla's closing price of $667.93 at the end of the first quarter, the value of that many shares would have been about $534 million. The actual value of the options position was not known. Options analysts said at the time it was possible the puts disclosed in the filing might be part of a larger trade that would curb losses if the put position went against the fund. No, it was a trade, Burry was quoted as saying in an email to CNBC on Friday when asked whether he was still shorting Tesla. The media really inflated the value of these things. I was never short tens or hundreds of millions of any of these things through options, as was reported. The options bets were extremely asymmetric, and the media was off by orders of magnitude, Burry told CNBC. Tesla develops 12,000-ton Giga Press for production of the one-piece car body. Tesla is currently using two types of 6,000-ton Giga Presses to cast the one-piece rear end of the car and the one-piece front end of the car. At the moment, this production technology is used only for the production of Model Y. And at first, the casting of the front part will only take place at Giga Berlin and Giga Texas, while the casting of the rear part is already taking place at Giga Shanghai and Fremont. Giga Texas has already started testing the Giga Press for the front-end casting to be fully ready when production starts. Another type of Giga Press with a clamping force of 8,000 tons will be used for the rear part casting of another Tesla vehicle, the coveted Cybertruck. During the fourth quarter 2020 earnings call, CEO Elon Musk mentioned that Tesla intends to use a similar Giga Press as for the Model Y, but the clamping force for producing the rear part of the Cybertruck will be 8,000 tons. According to sources, this machine is already at the production stage. Tesla and Hydra are developing a machine with a clamping force of 12,000 tons, which is designed to cast the entire body frame in one piece. With such a machine, the production of the body can be much faster and easier. According to sources, the production in this machine can reduce the time spent on car production by 25%. In addition, a 10% reduction in downtime is expected. This approach completely coincides with Musk's idea of how he would like to see the production of Tesla's cars. Using the huge Giga Press, the process of making cars in the manufacturer's factories can be as easy as making toy cars. As Musk tweeted, "With our giant casting machines, we are literally trying to make full-size cars in the same way that toy cars are made." And by the way, if you guys want to support the channel and get a free stock worth up to $221.50, be sure to use my referral link in the description below to sign up for Robinhood. Thanks for watching, guys. Please hit that thumbs up if you enjoyed the video and subscribe for more content.